improving the debt structure would lead some savings, but also reduce significantly fiscal vulnerabilities. And we know that there's a real need also to focus on revenue erosion. Fighting the global financial crisis has been very successful in some ways. As we can see in the next slides, some calculations that we've shown, some calculations that we did at the World Bank on the fiscal performance. We tried to calculate the structural fiscal balance, and we saw that even though there was a major fiscal stimulus during the global financial crisis period, this was also achieved by eroding permanently the revenue base, the permanent tax cuts. And so now the challenge is to go forward by trying to improve the structural fiscal balance. And we know in some calculations we did on the debt is that actually if you take the current existing policies and you try to project forward, then you know that the debt is going to be gradually increasing over time, and we have some distribution of risks, taken the shocks that have been hitting the economy in the past, shocks to growth, exchange rate, interest rates, would give you that the risk actually tilted upwards. So if you don't change policies, we know that, as has been the case since 2007, 2008, the debt GDP is slowly increasing upwards. And we know that actually at the level that the Philippines is at, above 50% of GDP, these are actually the levels at which Argentina in 2001 and Russia in 98 defaulted. They defaulted at 50% of their GDP ratio. And we know that what's happening in some of the European countries these days, with Spain being also at 50% of the GDP ratio, it's very important to get the debt GDP ratio down because you never know when markets will react badly or the international environment will turn against you. So the renewed focus on reducing vulnerabilities on the debt level is clearly welcome. Maybe on some of being at the World Bank, what we have done is with our colleagues when we saw the agenda of the new administration and the key focus on revenue mobilization without increasing taxes. One of the points that we, with our colleagues in Washington on experts on public finance, is look at past experiences with increasing revenue without tax changes. And what we saw actually was that this can happen. These are very infrequent. You very rarely have major increase in the tax effort without tax increases, but it can happen. And it happened, for instance, if you have, in two cases, one is regime changes. You have a revolution. And the best example we found recently was in Georgia when they had the Rose Revolution. So you was moving from an autocratic and not well-liked regime to a popular one. And I understand from some of my colleagues that to some extent this also happened in Korea Kino after the People Power Revolution, that the tax effort increased, but I haven't double-checked the numbers myself. Another example is game changers, where you have an important structural change in the economy or the probability of detecting tax evaders and so on. And what we saw is a major example was in Ireland in the late 90s, early 2000s, where they reduced bank secrecy, and this clearly tilted the power between the tax administration, capacity to detect tax evaders and others. And there was a major increase, again, without tax increases on revenue. And to some extent, what we've heard, I think, maybe sociologists or political scientists can better say whether this is the case in the Philippines, but it seems that the Philippines could be a good case for such a increase in revenue mobilization without tax increases. But we also know that the tax system in the Philippines has some deficiencies, and there's a symbiotic relationship between tax collection and the tax system itself, so that the easier the tax system, the better it is to collect. So reforming the tax system to improve its simplicity and efficiency, as well as equity, would be a major agenda, I think, looking forward. Does not mean increasing taxes, but it just means simplifying the tax system. Finally, I think my last point is from the international experiences. We know that all the best plans can really be derailed by fiscal risks. And the global financial crisis actually is a major example. We saw countries like the UK that had very low debt-GDP ratio and were the darlings of the market overnight. They have to bail out the banking system, and the fiscal space is gone immediately. And you have had a lot of countries like that in the developed world, thanks to the global financial crisis. So all of the reforms that Secretary Abad has mentioned, I think the key would be to limit the surprises coming from the need to bail out GOCCs, or you need to cover other off-budget or on-budget surprises. So the focus on improving transparency, accountability, and fiscal policy decision-making through a better fiscal risk assessment and fiscal risk management, I think would be one of the very significant and substantial early wins of the administration. And given the work that has been undertaken in just a month and a half, I think this is very promising. The strong focus on managing fiscal risks through actually institutional reforms within the DOF and other ministries actually is also welcome, in that we think this would be a much better way, given the international experiences, in locking in the reform process, so that after it would ensure both the credibility but also the sustainability over time. And as I said, maybe to conclude, this is a very welcome and challenging agenda, but we look forward to working with the administration in making growth work for the poor. Thank you.
Thank you, Mr. Leborn. Next reaction.